Good morning, everyone, or good evening to you, wherever you might be. Hopefully, we've overcome our technical challenges and you can both see me, hear me, and also see my screen. So, welcome. I'm Gordon Scott, and today we're going to talk about what stock to buy. The answer is right on your screen there. It's Advanced Micro Devices, AMD. That's it. If that's what you came to find out, what are the three letters I need to know about the stock I need to buy? You just heard them. You're done. However, just like last week, I had more than one idea, and it turned out that the other two ideas were better than the first idea I shared. So you might want to hang around because I've got three other ideas, a little bit about short selling and how to take advantage of a short squeeze, how to find a potential short squeeze and how to take advantage of that. We'll talk about that today. We'll talk about why this market will likely drift higher all through the week. I mean, there'll be some up and downs, of course, but it will probably drift higher all the way through into the coming week ahead. And we'll also talk about whether or not buying Apple is a good idea right now. I think it is, but we'll get into all of that in the next hour. Just as a quick disclaimer, I'm not a licensed financial advisor. This is at your own risk that you listen to anything I have to say. This is not intended to be specific financial advice to you and your specific portfolio. Trading involves risk. You could lose money, and do your own due diligence. I think that about covers it. Okay, doke. So why do I think Advanced Micro Devices, AMD, is the right stock to buy today, to buy now? Well, whether or not you do it right at the open or shortly thereafter or whatever, the reason I think AMD is so interesting right now is because of NVIDIA. So NVIDIA, as a comparison, you see, they jumped up like that. They had earnings. The earnings news was really good, but people didn't respond to it. Then all of a sudden, they just recently started taking off. NVIDIA is not the same kind of chip company as AMD is. However, both of them are somewhat related to cryptocurrency mining. NVIDIA more than AMD, but still AMD. And NVIDIA is taking off because they're getting some of their supply chain issues resolved, and demand has always been sky high over the past year or more. And AMD, look also, trying to say a bunch of things all at once. The demand is not going away for semiconductors. The supply is getting constrained here or there, and those supply issues being removed should allow for improved sales. This is part of what's happening with NVIDIA. Well, look, if it's going to happen with NVIDIA, it's going to happen with AMD. If NVIDIA has jumped up, run up all this distance, in fact, we can look at it this way over here, because these are percentage charts, right? So NVIDIA went from this level to this level, and that represents about a 20% increase in the price of NVIDIA, right? Where's AMD gone in that same period of time? We've gone from here to here. That's about a 9% increase in the price of AMD. Excuse me. We had this big run up here, and then we've come off of that. So this was this huge move on AMD. We rose about 39-40% before pulling back. We pulled back, but look at that volume. Huge volume on the way up, and that volume is still hanging around. I talked about this last week. Low volume it's trading at on average. And then you get a new level of interest, kind of hangs around. It doesn't go away. The big move. And we've seen us pull back and start to rebound. We got this little mini, inverse head and shoulders. We've broken above the high. We had that nice, slightly taller than average, not much, but strong day, higher than average volume of recent. And I mean, this all looks good as a potential breakout. Now, if people get excited about AMD and start running it up, where is it heading? Well, it's heading right there. And that's going to be potentially 31 to 43, so about a 12% move. And it could keep going past that if, things are favorable. We don't have earnings shock as a risk in the near future. So to me, this just looks like a good one because, I mean, what are you looking at here? You buy this thing and your stop loss is either right here or right here. Let me also show you let me turn off the percentages. We'll just go with move my, there we go, right here. Get rid of the NVIDIA chart. Okay. So we're at 111 and change. And so your stop loss would either be right there at 106 or super safety stop loss clear back here at 101. So basically $5 or $10, take your pick, right? What are you gunning for up here? This is a move of 112, so you got $11 higher. So either 5 or 10, and you're going to 11. Now, going 5 low and 11 high, that's risk 1 to make a little more than 2. 33% chance you're going to get all the way up here before you get stopped out. That's the way that setup works. And on the other hand, if you don't get stopped out, you make good money. That's 2 to 1 on your, but it can also keep going, and that's let it run, and sometimes it trends, and so on and so forth. So all of that is a nice setup for AMD. If, however, you're wrong, you're out $5 a share. If you're right, you're in at 11 plus with a good trend somewhere on the end to keep going. Now, some people are going to say, well, I don't want this 3-month trend that's going to maybe do $11. I want this thing. I want to be right here. And boom, I hit this baby. In just 2 weeks, I'm up $40, $50, 40, 50% in the trade. I'm just like, okay, I get that. But you got to take a lot of risk. Yeah. I'll show you a trade that has some. Well, in fact, let's just do it right now. I struggled with whether or not to make this an idea for you to consider as a good potential idea, and I decided against it. So what I'm showing you now is not necessarily a good idea. I think it's about an average idea. Because it could go good, but it could go bad. And here's what's going on. So if we look at Zoom communications, right? I mean, it's pandemic stock, right? We go back. We see the history. Where was Zoom? It was down here at 243. As the pandemic began to unfold, people realized, wow, this is what everybody is using nowadays. And then it goes clear up here, 566. So basically doubles in price in about 2-3 months. Really cool story. What's it done since then? Nothing. Deteriorated down, except that it's kind of leveled off. This is a lower high. We've made lower lows, lower high, have yet to make the lower low. Short term, we got this lower high, lower downtrend, ugly, right? But what if it kind of holds right here and makes a turn? See, look at this volume. See this is volume traded at a given price. This volume going sideways means, see, all this price in here got traded. And if people bought this, then they're kind of invested right here. And if it gets back down, they want to buy a little more and keep it going higher. I mean, it's not like you or I. We buy 100 shares, 1,000 shares, whatever we buy, and then we sit on it. We hope that it's going to go our way, or we've got a stop loss. We got something to knock ourselves out with. Fine. A hedge fund plays it a little different. Hedge fund comes in here and buys 100,000 shares, scoop, 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 best they can. Okay, think about that: 100,000 shares of a $300 stock. They're into this thing for 30 million bucks. Maybe they got a billion to manage, but 30 million is in this stock, right? Now, it's not all hedge funds. Some hedge funds. I bet you there's one hedge fund or mutual fund or something that's in this stock to that level I'm describing. Okay, they got 100,000 shares of this. If this stock starts dropping down, it starts going through that, right? That's a risk. That's a very significant risk. They're going to lose $100,000 for every dollar it drops. If it drops from where it is now, around 340, to down here at 300, that's going to be $4 million. Okay. Now, yeah, you got $1 billion to manage. 4 million is not even 1%. It's not even a round. Well, it is a rounding error, literally, just a rounding error. And so you think, well, that's no big deal. But on a position by position basis, oh, it's more than that. They care. Yes, they do. And so they look at this and like, well, what do we do here? We can't let this thing come down. We can't be losing $4 million just to get to this point. We certainly can't be losing, an $8 or $10 million to get to the point where we say, all right, we've got to cut bait and take our losses at $10 million. I mean, they don't want to do that. Better to go in here and spend maybe another $30,000 buying a few shares right here. So when the stock starts to creep down, they go buy, buy, buy. They keep nibbling at it, buying a bunch more to sort of defend that price, keep it propped up, because they needed to get up into here or wherever in order to feel comfortable selling. So look at this. It's huge volume spike come right up to there. That's where people have kind of decided that level is where they wanted to sell a lot. Here, however, is the level they wanted to buy. We're closer to this edge than we are up there. This looks pretty good then. Buy in here. You probably got a lot of nibblers all the way down, and they'll push it up to there, and they won't really start selling until you get up to that level. Okay, earnings are coming up. Earnings options are priced at an 8% move right now. 8% move on this stock is $30. So there's a good chance this stock will, if the news is bad, people will come in here and try and buy it, hold on to it. If the news is good, they might put in some pre-market orders in order to get people excited about coming in and buying it, with the hopes that it's going to jump right up to there. And once it gets up to there, then they're going to start selling. So all that sounds pretty good, Gordon. Why shouldn't we be a buyer right now? Why shouldn't we be jumping in on this? It doesn't go. The earnings don't report until 8 hours from now after the market closes. Why shouldn't we just jump in? Be there. Market's going to be good news. We'll be up here. Well, because if it jumps up to here, look at all that, that volume, right? That's seller volume. If it gets up here, that will it push through and keep going? I mean, this got way up here because of the pandemic, because the idea, everybody's going to have to do Zoom calls now. That was a year ago. Everybody's doing Zoom calls. We're on a Zoom call, right? I mean, it's like, is there going to be somehow this new flood of users that comes in? You know what I want to do now? I want to do a Zoom call. I want to buy Zoom. Why didn't I do this? No, we're not going to see this huge influx of users. If in fact there's any good news, these people, price jumps up here, they're going to take that opportunity to sell. See how that ran down? Yeah, that's going to happen. So I feel like Zoom, and how about that volume, right? Remember the whole bit about big volume comes and stays, then there's an opportunity. This has been declining. See how over the past year, that volume just getting lower and lower and lower. There's less and less interest. So if some hedge funds bought here, and then all of a sudden it jumps up to that, and they're thinking, okay, we've got to take our profits. That's it. The news has arrived, and they start selling, and all these others, institutional investors, they start selling. They're going to push that down. Now, if in fact it pushes down and comes back down into this area post earnings and holds little support, I think that's a good place to buy, because then most of the sellers are flushed out. You're buying, and then it's going to drift, but it's going to take a while. So, is Zoom a good opportunity? No, I don't think it's a. I think it's a mediocre opportunity. I think there's some good opportunity for it to slowly trend higher. I love the way this price long term could be turning around and trending, but this doesn't really have all the characteristics of a catalyst that could really move things forward. So I spent all this time showing you why some things, I mean, there's a lot here that might make you think this is attractive. Sure, there could be possibilities. Right. I know possibilities. I'm looking for something that has a bit of an edge, has a little bit more than possibilities. And for my recommendation, AMD, as I said, not a licensed financial advisor, recommendation for you to consider to go do more due diligence and look it over and decide for yourself what it was. Now, I'm going to jump back to a couple stocks last week. Let's go look at Pfizer. So we talked about Pfizer last week. Pfizer has turned out to be a terrible idea since last week, at least in terms of, what we did. Now, it hasn't stopped out. I had the stop clear down here in the 46 range. Hasn't stopped out. Could stop out today. I'm willing to admit that. But notice this. The volume is still elevated. We had this big run up, and yeah, we're selling off, but we'll just have to see what happens. I mean, it might get stopped out, but it might find a base and turn around. After all, what's going on here with the NASDAQ futures? The NASDAQ futures are right there on the screen. Okay. So since the weekend began, I should say ended, Sunday, we have seen that line right there. So on that line, we gapped up a little bit, ran up to this level, and we're down. We're off that level now, but we're closer to it than we were from where we opened over the weekend. And there's the NASDAQ now, just kind of jumping here, 5-minute chart. I mean, it's looking slightly bullish, slightly optimistic. By comparison, let's look at a few others. There is the Aussie Yen. And as you can see, the Aussie Yen has, since that same time frame, dipped. But just here in the past few hours, it seems to kind of be trending higher, a bit of a lackluster move. How about Apple? There's Apple since this morning, jumped up and kind of hanging in there. Microsoft jumped way up and has come off since then, but it's still up, still a gap, over a dollar gap, a third of a percent. And then the futures for the S&P mini, ES futures, trending generally higher. So I feel like we've got the stock market in a nice upward drift after what everybody interpreted to be good news from the Fed, which was we're not going to raise rates. And we're not even going to stop buying bonds, because buying bonds, the Fed buys bonds, that just puts money into the economy, the U.S. and essentially the world economy too, but primarily, starts at the U.S. economy. So we're not going to stop buying bonds. Maybe at the later end of the year, we'll trim a bit of our buying, but that doesn't mean we're raising rates, right? He said that, and the market's like, sweet. That just means stocks are going to get more expensive. So buy more stocks. And that's what the market did. So that's kind of the prevailing attitude now. Is that going to continue? Yeah. Well, I don't know about how strong, but the attitude of we're more optimistic than not is here. It's still pervading. So we're looking for continuation, like stuff that did well yesterday and that have a likelihood of continuing today. In the technology space, we see that evidence of the continuation. Okay. So if we have evidence of the continuation and we're looking for something that did move well, it's not Pfizer, right? Pfizer moved poorly. Pfizer is going to be connected with the fears and pandemics and that stuff. And despite the fact that I said the pandemic, I mean, the market seems to be not taking the pandemic, the Delta variant, the resurgence of the pandemic, the new lockdowns seriously. I thought, well, but maybe there's a chance that they will, and that this really will play out, and so therefore Pfizer. But as you can see, market has responded by taking Pfizer less and less seriously, and the threat of more. And it's not that there aren't. It's not that the Delta variant isn't dangerous. It's not that the people aren't going to catch COVID. The market is not saying that. The market's saying the economic impact of all this, even if we do have to do new lockdowns and so forth, economic impact is minimal. We're still going to be fine economically, and it's still going to be worthwhile to invest. Well, how could they say that? Lockdowns, businesses dying and so forth. Well, yeah, but U.S. government spending trillions of dollars. They got your safety net. That's what the market is saying. It's like, we don't care if Delta variant comes. We don't care. We go back into lockdown. We still want to invest specifically in U.S. stocks. So that's what it is. Got to read the chart, let it tell you. Spotify, on the other hand, I had said, hey, Spotify's a good idea. And that was right here. Well, Spotify turned out to be a fabulous idea since then. So what did we like about Spotify? Well, notice it came down. It had a gap. It crossed that 10-day moving average as it gapped and drifted higher. Not all stocks that gap like that drift straight higher in the first 5 days. In fact, the better days are days 6 through 20, the 15 days after the first week, in terms of typical performance for these turn of trend gap trades. So although Spotify was good last week, chances are could be better this next week. So I want to show you here the outcome. Spotify, I went ahead and put it on paper trade as idea number 2 from last week. Pfizer, that one's about to get stopped out. That's the amount that it would lose if it was going to lose. And then, of course, the Microsoft trade, looking fabulous, still working as a trailing stop. Where's that trail right now? We got the stop at 288.50. Yeah, right underneath that big. In fact, I'll draw that so that in future I can refer back to it and say that's what the stop is. Now, what we're interested in doing is if this price, because it had jumped up and now has come back, if it goes higher and breaks above that level there, 310 or so, then we're going to get to move our stop up to here and lock in the gains below that. So we're going to keep an eye out if Microsoft does that in the days ahead. Soon, any tough on SQ, SQQQ? Let's have a look at this question asking about. Well, actually, let me make sure. I'll talk about Square. So Square, that's a good question. Thanks for that. So Square is coming along here at this average volume. It got a nice jump from earnings. See that? We do. The report was 33. I mean, the estimate was 33 report, turned out to be 66. So it came in double ahead. Yeah, good drops, and then it's holding. All that looks good. We had that gap crossed over the 10 period. Now it's come back. There's the week. Now we've got day 16 through 20 ahead. Hey, thanks for bringing this to my attention. That part of it I love. It's really good. I don't love the fact that the volume is, kind of back down to low and normal. But considering the time of year, this is a low volume time of year. So, the stock is acting normal for what it should be doing. I kind of want to see something that's acting abnormally ambitious, but that's okay. Volume is not a huge make or break, but if this volume were slightly elevated, I'd be really enthusiastic about this. This, mildly enthusiastic. Pretty good idea. Okay, so SQQQ is the idea. This is the stock that you buy if, in fact, you think the market's going to go down. Think that we're going to crash, head lower, then you'd want to be a buyer of this. Well, I don't think that's the case. A couple of weeks ago, we talked about this, and because we were heading down. But since then, boom, what has it done? Just, and as you can see, it just the market just doesn't want to give it up. And if we look at the VIX, you'll see that we've had these spikes, but it's not particularly troublesome. It's keep pushing down. We're going to watch to see which one of these hits next. Does this break a new low, or does that break a new high? If all of a sudden we started going down, we broke this high, that would be the third higher high in a row, and that would be worrisome. At that point, once you see the VIX kind of get up into here, then buying SQQ is probably an interesting idea, but not today. That's not where we are. So let's see where AVGO. Here is something that I want to share with you as idea number 2. It's unfortunately a very high price stock, but if you do fractional shares, or you have more than $500 in your account, well, a good bit more than 500, let's hope, then you can buy shares of this. I really like this as a possibility coming up to earnings. We're a few days away from earnings. We're breaking a brand new high in front of earnings. Could see this thing move, drift higher. This has only a 2% move priced into it after earnings. Only 2%. 2% on $500 can be like a $10 move. But I kind of think that it's been in this consolidation for a long period of time. I think either it breaks out a bit or it, dumps back down. I think 2% is underpriced. So I think the great thing here would be an option trade. You can put an option trade, vertical, what they call a bull call spread, or a bear put spread, or both, like a condor trade, right? So you can take advantage of a big move, whichever direction it goes, which I think is probably going to be the case. Which I don't have a good sense of which way I think it's going to go. It seems overly optimistic. Think it's going to go, blue sky trade and go up. Not that chart-wise it could do that. Chart-wise looks great to do that, but it's like, what's with Broadcom's business? Why them? Why now? It's not enough special to be thinking about. So Apple is Apple. This leads us back around to Apple. Is Apple a good buy right now? And I think it is. I think you've got a bunch of new products and a bunch of new buzz, some talk about, who's the next CEO after Tim Cook, and, lots of things to put attention back on Apple. Oh, and that's all not to say anything about the fact that people decide they want to invest in the markets right now. They want to invest in technology stocks, NASDAQ stocks. So, I feel like Apple's a good opportunity. We actually had this chart set up in a couple of weeks ago, and just as an example of what we're doing. And it's interesting to me because we set a stop that did not get triggered. It was nice, perfect stop from where it was, and we failed to make a new high right there, but I feel like we could easily manage that one going forward. So technically, I like Apple for a short-term move, but fundamentally, I like Apple for what's coming up here in the retail season, the fall season. Some new Apple Watch innovations, some new iPads. The whole product line is going to get reinvigorated here, and I feel like people are going to be anxious and interested to see what the company can do. It's been moving sideways since middle of summer, July. Had this nice big run up coming into earnings, and then it just has stopped. Hasn't gone anywhere since then. I feel like good chance it can. Now, if Apple goes up and if Microsoft continues to go up, it means NASDAQ's going to go up, and it means other stocks, particularly technology stocks, are going to keep going up. And that leads us where? Back to AMD. So I'm going to set up the trade here and put this on in paper trade so we can track it. And let's see, we are looking at 112 and 60 by 113. So we're talking about opening up somewhere up here in this range. It's right up in here. And I definitely want that. I would just normally do a market order, but I think so that I can set my stop appropriately, I'm going to do a limit order. We'll do a limit. Yeah, we'll do a limit of 113. So 113's higher. I mean that's basically the pre-market ask price. I probably don't have to go that high, but just in case, right? In fact, I'm going to do this. I'm going to go 113.01. Just make sure that gets in there, and then that's the limit order. Let's see the risk. The percent risk I'm after. 1% risk. Well, okay, wait a second. Keep hitting the enter key. I mean to hit that. This 288.50. Is that where I want to be? That's Microsoft. Okay. Working orders. Okay. Gonna buy, and we're gonna set a stop loss at 111. Yeah, no, that's too tight. So I definitely want to modify the order. There we go. And come in here. If I'm going to take profit at 340, I want to 105. Is that right? Yeah. 105.50. Yeah, that's 780. No, 680. So okay. 620. That's where I want to be. All right. Now that's 4% risk to my account, so I don't want that much. I want that 335 units. That's right. There we go. That's the order. Okay. Okay. So we're in here at 135. I've got a take profit order at 1 16. So if it gets to there, I'm going to take the profit. Now that's also enough room though. It might take 2 or 3 days. If I get that good, I might remove the profit order and then move the stop up. But as it sits right now, I'm going to look for these numbers. And so we'll see after market opens in about 20 minutes or so what the AMD order looks like, how that goes. Let's go look at SQ though. Is that another good idea? What's SQ doing pre-market? We're up 270. So we're up in here pre-market on SQ. SQ is, among other things, a little point of sale. It's for people who have small shops that are selling things, and that's basically, if you think about it, that's sort of a recovery trade coming out of the pandemic trade. That's more than just, we're going to be fine whether we go into lockdown or not. That's no, we're coming out of lockdown. That's what I mean, coming out. I mean, that's what SQ is saying, is that people are going to get post-pandemic. They're going to move on and start doing things. That might be a bit premature, that attitude. But then again, investors always tend to anticipate stuff. Not that it's going to happen now, but anytime in the next 6 months, then they want to get in ahead of time. So maybe the idea that the fact that it's coming up a little bit here and it's gapping, that's actually a really good sign. I don't know if this is strong enough for idea number 2, so I'm going to come back to this. Let's instead go to something that I mentioned earlier. I want to tell you about. Some people have really been interested in this whole short squeeze thing, gamma squeeze. How can I find a stock that might be ready to give me a let's see, it's a gap. Yeah. How can I look at stuff? How can I find a stock that might be ready to do a short squeeze? Okay. I'm going to change a couple of things here on my screener, and then we're going to search for them. The first thing is float short, the amount of short selling transactions given stock. Now this data has about a 6-week lag. So 6 weeks ago, the float was over 20%. And AMC and Blink and some of these others, you would think, oh, those are the meme stocks, right? Well, right, but not all of them. Some of them you probably haven't heard of before. Now, the thing is, if in fact one of these stocks all of them have over a 20%, short float. So let's see if we can find out here where their float is. There it is. Yeah. Okay. These are the numbers we want to see. Right here. See how the float short? I'm going to sort this by who's got the most, highest percentage of the float that is short. Okay. That's Blink. Now look at this stock. This is really interesting because you see that price is clear down there on the lower end of its trend. And it's 33% float short. So there are a lot of people that are short this thing. They want to look at this stock and expect it to go down, and they want to sell short with the idea that the stock will go lower, then they'll buy it. Okay. If somebody changes their mind about this and says, this is a good company, and people start buying it up, then the shorts have to get out in a hurry, and they panic, and then they enter buy orders, and that just pushes the price higher. That's a short squeeze. So what stocks are candidates for a short squeeze? I mean, the most interesting and famous short squeeze was GameStop last year. And about this time last year, Keith Gill, aka Roaring Kitty, and he came out with a couple of videos and said, GameStop is crazy. It's the best asymmetric value play in the markets right now. I don't know how I could argue with that. Right. That's what he said. And it was around $4 or $5 at the time. He thought, wow, if a short squeeze happens, this could go to $50. Yeah, dude is wealthy because it went to 400. He took some off the table. He's still holding it, so he says. But I mean, he had a like $200,000 portfolio he was working with, and it ran up super high. He cashed in about 3 million of it, so about 10% of his GameStop position. It continues to still hold it. I was really surprised by the idea that he might still be holding it, but whatever. He bought it $5. It's 180 or whatever it is. Of course, he's still holding it, but he cashed out. He took some of it off the table, and yeah, you got to admire him for doing it. That was a smart call. Would any of these stocks do that same thing? No, they can't do the same thing. Keep in mind, GameStop was over 100% short, over 100% of the available shares. I mean, the available shares, the size of the available shares, the float. There were more shares in that were already in an established short position. So these things aren't even a third at most of that same degree. But that being said, what are they and what do we got? We have Blink here at 33%. But you can't just look at the float short number and know that. You've got to know a couple other things. Like, for instance, here's Riot. Look at Riot, and it's at 23%. Anything over 20% is pretty heavy because it could generate a short squeeze, at least a small one that would last a few days and would send the stock significantly higher, right? That could happen. But in order for you to believe that it can happen, you need to look at this number over here, short ratio. And that is comparing the amount of available shares that are short and the average trading volume. How long would it take for all of those shares to get out? And the answer here, 1.87, that's like 1.87 days. Yeah. It's not even 2 days, and all the shorts could get out of their positions. You're not going to create a $10 to $400 move in a stock like this. But you might create a 20, 30, 40% move out of a stock like this right here, GDRX. 27% float short with a short ratio of 11 days. It'll take 11 days for all of these people to get out of their short positions if, in fact, they get afraid of that, short squeeze. Let's actually do this. Let's take away the average volume. Let's get into a little bit riskier stuff. Puts 9 more stocks on our list. Let's see if we got a short ratio, how high that short ratio goes. These are all going to be float shorts over 20, so that's good. But we got a short ratio on WRLD of 28 days because the average volume is only 26,000. Price is already at 192. You know what that is? That's a short squeeze that's already hit. That's people got squeezed further back, and they're stuck. Could go higher because the short ratio is still pretty high, right? In GPI, this one on the other hand, this one hasn't even happened yet. This is a 20% float short ratio, 26 days, average volume 90,000. I mean, that would take a whole month for all the shorts to get out at that volume. Chances are, if the squeeze got going, you'd see this thing really move. You'd see the volume really move. But as long as the volume was moving, price would move too. So in GPI, I mean, it's really low. I don't usually like to trade in stocks that are only doing 100,000 shares a day. But where you're talking about this kind of stuff, this short float, I mean, these short squeeze candidates, And that's kind of what you want to do. IGMS is another one, 22 days it would take to get out. Fizz, this one I like. This one I think is really interesting because it's almost 20 days, 26% short float, and it's 300 shares. The problem when the shares volume gets really low, the difference between the bid and the ask gets high. But at 300,000 shares a day, it might not be too far apart, the bid and the ask. And you know, just that trend coming down, starting to turn up. That means people are buying, and not necessarily a lot, but some. They're buying, and because they're buying, they're looking at some general interest, and they're not seeing more resistance from sellers pushing the price down. So short float idea there, Fizz, that could be good. And so this one's CACC. Yeah, I mean, let's go on to this. There we go. CVNA. Here's one you don't want to touch. This is something that looks, the short float numbers look good. You got 21%, you got a short ratio of 13 days, but the average volume is 1.23 million. Okay. And where's the price? It's up around 360 already. Remember I said this thing is 6 weeks behind. Okay, so that is CVNA. Let's look at this. Let's go back 6 weeks ago and see, you know, what was going on with the stock. Earnings happened, earnings were bad, earnings tanked. People got short, lots of people got short. That put it on Wall Street Bets crowd, Wall Street Bets crowd's radar. Stocks around $230. And then all of a sudden people start buying, these shorts start getting squeezed. And see what's happened here? 233 to 360. That's like a 50% move over the past, 2.5 months, past 6 weeks. You know, so in other words, there was some shorts here. They started getting out. They probably continued to get out. And now what do we got? Out of the middle of nowhere, this gap and drop kind of play, getting us back to pre-earnings news. So I feel like this is it. This is the top. This is, you know, we're going to sell down. Maybe we'll buy up later. A short squeeze? No, it's already done. The 50% run. That's what we were looking for. So it's over. Party's over. Don't show up. Police just arrived. Yeah, moving on here. Now let's see. So so this is float short. We're going farther down. The short floats get smaller. So I think if you're interested in a short float play, if you're interested in, you know, the possible short squeeze, that's probably your candidate right there, Fizz. Let's have a quick look at how Fizz shares are being priced. Free market, yeah, if I can, took a second. Okay, so yeah, see, this is 44 by 46, $2 spread apart. Not fun. But what also means is if that spread stays far apart, you buy in, then those shares really take off. But you know, like if it were to stay like this, you'd have to give up 2 shares to get out. This actually has weekly options available on it. The fact that it has weeklies up, they're out in April 22. That's kind of fascinating. Not exactly sure why it's got that one weekly. It's probably because there was a bunch on it for a while, and it's tapered off since then. But these options, see how these options are tight? That's that's still really good. And so what that means is there'll probably be a tightening of the bid and the ask spread when this comes back in. So making it, quite tradable, I would say, quite tradable. So yeah, I think Fizz is actually an interesting idea. And so I'm going to go ahead and try to set up the paper trade order on FIZZ. Yeah, so that was it. See, Fizz has already had its short squeeze moment. It was already a meme stock. That's why it had those weekly options from back when. So it's already done its thing, but it's still there. There's still a potential for, uh, you know, a short squeeze move. Not this big old thing here, but well, all right. Look, GameStop had a lot of attention on it. It ran up, made the short squeeze, then came the gamma squeeze, then came the late bloomers, and then just more recently, it did this, right? So GameStop's just not going away. There's still people caught in it short, and there's still people that are just overexcited long. So on the other hand, it went running up, and you kind of had this moment, but it hasn't really been revisited. Could it be revisited here in the next little bit? I think there's a chance it could be. And I think that if it did even a little bit, you're talking about 45 just to that high, 54, 9 and 45. That's a 20% move. Um, I think that could take place. You've also got some very heavy option trading going on, and so we could see a gamma squeeze out of that could be even bigger than these little moves right here. Could run up, and I can do that quickly. Would probably do it after earnings though, just by looking at this 9th of September. So you had 2 weeks where it could drift higher. If it drifts in your favor, then you can either stay in the trade or whatever else. I don't know that it's the best trade in the world, but it's a pretty good trade. I'm going to give it a try in the paper trade here. So let's go set up a Fizz trade. I'm going to say, what's the 44 by 46? I don't know. I want to go with 46. I'm going to go 45. We'll go 45.50. I'm fine with that for getting in. And we're going to set the stop loss. $41.63, $41.50, so that's 400. We'll go $4 lower. Take profit. We would normally just go 200 higher, just to have a risk 2 to make 1 high turnaround thing. Yeah. I'm going to put that on. I'm going to go ahead and take that if it works today, and then I can come back and redo this over and over again. So yeah, I know this could run, and you'd love that, but that's not what I'm trying to do. I'm just trying to grab it, get a little profit, and keep doing that over and over again until I feel like, okay, this is the time. I'm going to sit back and let this wait. And so then the risk, 1%, 69 units. Okay, weird number. I'm fine. All right. In about 4 minutes, we'll see how that goes. 45.50, whether or not we get in this. What are some other ones that might be worth looking at? Well, here, let me just go do the gap strategy. Whoops, that might be too late to do this. So it's so close to the market open. Yeah, these databases have cleared from, they wiped out yesterday because we're too close. So we'll go to the screeners. Follow through screener. Bill.com, starting with the largest stocks. Bill, DLO, got S right here. Oh, sorry, that's not what I meant. So I looked all three of these and I didn't feel like, I mean, this fits the profile, but it's way up there. Let it come back down to 66 or something, right? But S, kind of IPO situation. And then the other one was DLO. Also IPO situation. Yep, first 5 days, starting up in here. This isn't bad. You buy this, you set the stop here, and try to get it if it gets just a little bit higher, or you let it run if you see that activity. I do like the fact that the volume was down here, with that spike and the volume still hanging around to see that, but relatively speaking, that's what's been happening. So that could mean a break from the new highs, attenuation, looking back at where the IPO price, it's really done well since then. We got in 30 and it's now doubled since then. So people could be really thinking this has a lot of legs. I didn't feel like it was the best possible idea, but it's not a bad idea. So, all right, we're just a few seconds away from the market opening up. Let's go have a look at the how things are shaping up. We got the Aussie Yen now having broken its old high level there, so it is drifting higher. The S&P 500 showing also continuing higher. Microsoft just in the last 5 minutes starting to trade a little more actively in Apple. So they're all kind of holding their levels, and then the NASDAQ, oh, that's Fizz. Here we go. What's the NASDAQ going to do right out of the gate? NASDAQ started with some buying, but it had okay. Buying seems to be hanging on there. That's good. All right, let's go back to here and check out our paper trading orders. Looks like we got put into Fizz and we got AMD. Microsoft is continuing higher. Spotify, so we got stopped out of Pfizer. We're still in Spotify, but and we're better on Microsoft. So AMD is in, Fizz is in also. We will track those through the week, see how they play out. AMD in and moving higher just like we wanted. That's our number one idea. We're happy about that. FIZZ. Okay. A terrible start for FIZZ. So could be good. FIZZ looks like it's down because of the difference in the bid-ask spread. That hasn't tightened up. Either that hasn't started trading or it's just that loose. Yuck. It's only about 60 cents on spread. I mean, only, that's terrible, of course. But if we're not really trading heavily yet, prices just basically hold for some whatever reason. Figures. Okay, NASDAQ looking nice and strong. That means our AMD trade's gonna likely do well. Let's see if it's actually trading or not. It doesn't look to me like it's trading. Not seeing any movement on it. So and AMD. Okay, AMD is on the move. So today, my idea number one turned out to be the number one idea, in fact. So that's good. Gotta love it when a plan comes together, huh? All right. We will come back and see how the AMD trade treated us through the next week, through the course of the next few days, and whether or not it played out the way we wanted. Until then, everyone, take care.